Good morning and welcome back to the continuous discussion on the mock paper. Today they're going to discuss section B of the mock paper 2. The question that very interesting one and that many students facing challenges, that is cash flow statement. There is a very comprehensive detailed question. I will discuss the complete question and then I will answer the question what is requested from the mock paper. Let's go through to the question immediately. You have been given the following information relating to a limited liability company called Nobri. The company is preparing financial statements for the year ended 31st May 2014. Statement of profit or loss for the year ended 31st May. They have given all the information in a normal template for a profit and loss, revenue, cost of sales, gross profit, and so on. And then they have also given you the statement of financial position. And usually when you have a cash flow statement question, they also will give you some additional information. So the additional information is given here. During the year ended 31st May 2014, the company sold a piece of equipment for 3,053,000, realizing a profit of 1,540,000. There were no other disposals of non-current assets during the year. Depreciation of 5,862,000 has been charged. There were no amounts outstanding in respect of interest payable or receivable as of 31st May 2013 or 2014. There were no dividends paid or declared during the year. So in order to answer a question of a cash flow statement, what usually you should be first doing is that you take the profit, you have to sketch the format. The format will have three sections. So the cash flow statement will have three sections. It is categorized as to cash flow from operating activity, this one, and the cash flow from investing activity, this one here, and the cash flow from financing activity, which is this. So you categorize into three headings and then you leave enough space. Usually I would recommend someone answering a question in a A4 sheet, you may have to have 2 pages. The first page you should devote completely for operating activity, the workings for operating activity, and the second page for financing activity, investing activity, and the last part of the cash flow statement which talks about the increase or decrease in cash. So you have the format ready. Once the format is sketched, before you answer your question, you have to sketch down your format or the template, in other words. Once you've done that, then the next step is immediately what you do is you go to the question and you go to the profit and loss, and then you check the line item profit before tax. You can clearly see here the profit before tax is 41,738, which I will take it here. So this number I have taken. So that's from the question. Without worrying or bothering about any other additional information, you straight down take that line item information into our answer. After completing that, then you go to question again, and then you come to the balance sheet, and you have to check out the cash and cash equivalent. You have to do a working for cash and cash equivalent. Some question you may only have cash under current assets, but some question you may also have bank overdrafts under current liabilities. So what you have to do is you need to do a working in this way, in this format. If you see here, see the working what I have done already. So this working you have to do. So what you do is that you take the two relevant years. In this question it is probably 2004 and 2003, and 2003 is the last year, and then this is the current year. So then from the question we take the information cash. Last year cash 2,224 I have taken in, and the current year cash 3,689, which also I have taken in. Then what you do is that you find out the difference between these two. So when you find out the difference, that you give a plus answer of 1,465. and then you go to the current liability. In that you also find over there bank overdraft. So what you do is just do the same thing. See, since it's a bank overdraft, it's a liability, so I have written the number within brackets. Please note that as well. So what you do is that you again find out the difference. The minus number, negative number reduced, meaning in mathematically it is increased. So again you have a plus answer. So answer is 1440. And then accordingly we take the summary total, the final total. We get minus 1844 and minus 4749, and the difference is 2905. This 2905, what you do is that you go back to your cash flow statement and then you place it here. So that you call it, see, I have written here in dotted lines, and then I have written this number in black. Why? Before you start with the time of completing your format, you may not know this is the increase in cash or decrease in cash. Accordingly, you leave that space. Once you complete this calculation and you know that it's a plus answer here, so it's a plus, so that means increase. So I have written net increase in cash and cash equivalent, which is 2905. This cash and cash equivalent is the term arrived from IAS 7. If anyone have a concern over that, you please read IAS 7 in detail, available PDF versions in net, or you can also visit my YouTube channel, which has a separate discussion to talk about the detailed standards on cash flow statements. So I complete this now. Then what I do that, I have done with this. Then you go to the additional information. You have additional piece of information, actually 4 information they have given you. So the first one, during the year ended 31st May 2014, the company sold a piece of equipment for 3,053,000. So what we then have to do, we have to open up an account or T account called disposal of equipment or disposal of non-current asset account. And they say that you have received 3,053,000. Note that here all the numbers are in thousands. So I am ignoring the last three zeros here. So I am receiving cash 3,053,000. So I will debit that cash here, and that is one info. I will credit here and debit to cash book. And then what they say, realizing a profit of 1,540,000. So in the P&L account you credit and debit to here 1,540,000. So that is profit on disposal. Now this now we have to see this information not available. This was not given, and this also not given. So this is now incomplete account. So in order to complete that, we have to complete the PPE and the accumulated depreciation account, property, plant and equipment account. If you see the question, they have given you opening balances and opening and closing balances. So opening balance for the cost of non-current assets 114785 and the closing balance 144,844. So I have taken in these two numbers. As well, my accumulated depreciation, I have the opening balance here and the closing balance here. Please note that the additional information also telling you that depreciation of 5,862,000. So there has been a depreciation of 5,862,000. So this you credit here and debit to depreciation expense. So now what you can do is that you can balance the accumulated depreciation, the balancing number or the missing number here. This is, we call it balancing figure. This balancing figure is 4748, that is the related depreciation for the asset which we disposed. So this I debit here and this should be credited to the disposal account, which I have brought it here. Now you can balance the disposal of profit, this equipment account, and then you can find out what is the, see, I have the cash what I got, I have the profit on the realizing this sales, and I know how much the asset related asset accumulated depreciation. All I don't know was the cost of the asset that I have disposed was. So when you balance, you get this answer, and this is again a balancing figure. This balancing figure 6,261, and that you extend to your property, plant and equipment. See that I have brought it from here to here. If you see this arrow mark, you understand that. Then before we complete this, you again go to the, please remember this step, always check your equity portion of your balance sheet or the statement of financial position, equity portion. Under equity, you can clearly see here a line item revaluation surplus, meaning when any of your non-current assets, if you carry out a revaluation and that if there is an increase, this number will change. You see last year 7,123 and the current year 15,395. Accordingly, there has been an increase. So that increase is this 8,272. Here, little bit of an additional technical piece of information. If any deferred tax, this will have an implication on that. But at F3 level or at the financial accounting level, don't worry about that. So now we come back to this revaluation surplus. So we have it here and then we balance this account. So when we balance, the balancing figure is this. This is the balancing figure. 28,048. So now we have completed the given additional information number 1 and number 2. And number 3 is straightforward. There were no amounts outstanding in respect of interest payable or receivable as of 31st May 2013 or 2014. There were no dividends paid or declared during the year. Now what you do is that we go to the question and we start with the profit and loss account. And as you know, I have taken the profit before tax 41,738. So I need to work upwards. So here I have two line items, investment income and finance cost. We have to consider as part of the IAS 7 requirement, these two items should be considered as a adjustments for non-cash item. See, I should take it these two here. The investment income is a profit, it's a credit item there. So the profit is increasing, so therefore I should take it out. And the finance cost is sort of an expense, so the profit is decreasing, so I have to add back this. And then related adjustment, I need to do it later. So before we do this, we also need to check your balance sheet under current assets and current liabilities, any receivable payable related to investment income and interest payable. As you clearly see, there is nothing. So what you do is that you take it down this here. You see, I have taken the finance cost paid. Finance cost paid here I've taken, and I also have taken under investing activity investment income received here. So that was looked after. So in the profit and loss account we have taken everything except the tax. So now let's go to the income tax. So you open a T account for tax payable, go to the balance sheet and find out you have a liability there. So you have tax liability, opening balance 7323, yes, closing balance 7989 in fact, and then the tax expense as per the profit and loss account, you can look down, look at the profit and loss, it is 9857. It is 9857. Accordingly, the amount we paid, tax we paid, cash paid is 9191. So now what you do is that you go to your cash flow statement and you have a provision or line item or space to include the tax paid, and that is this. So with that, we are done with our profit and loss account. Now we come to the balance sheet. In the balance sheet also, the non-current asset cost I have taken in, I looked after. Accumulated depreciation I have looked after. Now inventory and trade receivables, these are changes in working capital. So here I have adjustments for working capital changes. You have to see whether these items are either increased or decreased. Compared to last year, inventory has been increased and the receivable also increased. So when these current assets increasing, effective cash impact is reduction. So you need to show within brackets or minus. So increase in inventory 866, if you calculate the difference, you will find out. And the trade receivables also an increase, and that again, since it is increased, minus. So we have done with that as well. Cash we will leave it, we have done, we looked after already. Now we go to equity. When you go to equity, your share capital has increased, and also along with that, share premium also increased. Here another point to realize, if the company has given any bonus issue, we have to do a working, but in this question there is no such adjustment, so you can continue straightforward. What you do is that you find out the difference, 27 minus 23,331, so that is your in the financing activity, issue of shares 3,669, and the share premium 14,569 minus 10,788, and that is 3,781. So we have done with that, and the revaluation surplus also we looked after. Retained earnings, do not worry. And then we come down to non-current liability. We have a loan note, 6% loan note, 17,824, and last year 24,68, meaning we have repaid some of the loans. So that was a part of the financing activity. So repayment of loan 6,244. And then current liabilities, bank overdraft we have taken, trade payables we have taken, and the taxation also we have taken. So effectively we have taken everything. Now what we then have to do, we have to go up and then take the total of all this, and this give you 5353, a plus number, and then you have to take the total of all this, and that is giving you minus 10,175 here, and then you have to take the total of this, and this, and the total of that, these three, giving you 36,916, and then we have to take the subtract these two from 36,916, so 26,548. At this point, please also remember, if the company has paid any dividends, you have to subtract at this point here, somewhere here. So we get 26,548, and then we take the total of, net total of this, that is minus 24,849, that is cash flow from investing activity, and then we have to take the net total of this, and that is plus 1,206, and that is cash flow from financing activity. Now what you do, take the total of 1, 2, and 3. So if you take all these three, your answer is 2,905, and you go back to the table what I have done at the beginning, and you have 2,905, and these two answers there. Accordingly, answer is matching. Now let's go to the question to see what additional question they are asking for. So they are asking you to work out the net profit before tax. We have done that. Depreciation, we got it. Profit on disposal, we got it. Investment income, we got it. Interest paid, we got it. Increase in inventory, we know. Increase in receivable, we know. Decrease in payable, we know. Yeah, I forget to talk about that, if in fact. Come back to, here. See, payables, if you see the balance sheet there, payables actually a reduction, so it's a minus, so that anyway we have done that also. Then we have taken in cash generated operation, interest received, interest paid. Actually they have shown here interest received here, this must be shown under investing activity, and then interest paid is fine, tax paid, and the cash flow from operating activity. Now what is the question they are asking? The carrying amount of property, plant and equipment disposed of. So what do you mean by that? Actually you go to this disposal account, and you have the cost 6261, and you have the accumulated depreciation 4748. So the difference in this is the carrying amount of the asset which you have disposed. So 6261 minus 4748, 1513. So that is the answer for this question. The purchase of property, plant and equipment for the year ended 31st May 2014. So that you have it from this account, 28,048. That is straightforward. And then which two of the following increase is in equity accounts are shown as cash inflows in cash flows from financing section of the statement of cash flow? Increase in share capital, yes, that's the answer. Increase in share premium, yes, that's also the answer. The last two answers are incorrect. So accordingly, this is the complete answer for this particular question. With this, I will stop my recording for this question, and I will continue with the next another question in my next video. Thank you so much.